Hey everyone, in this video I want to go through why I recently sold my Wyndham Hotel and Resort position in my portfolio. I want to talk about why I got into the stock, why I just got out of the stock, and then also want to talk about some news around the company and a potential merger that's been in the news over the last week or so, as well as what I'll be moving the money that I sold this company for into in terms of stocks that I allocated that capital towards. So if you like this type of content, be sure to give the video a big thumbs up. It really does help the channel, help these videos get out to a lot more people, especially for small channels like myself. So I'd really appreciate it if you just give the video a big thumbs up, and we will get right into it. Okay, so looking at the stock price here, you see today the stock's trading just over $70. Wyndham Hotel and Resorts is expected to do about $3.50 in earnings per share. So the company's trading right around 20 times earnings. They have a $6 billion market cap, paying about a 2% dividend. On this stock here, it's been on my watch list a long time. I love their business model of just collecting royalty payments on a monthly basis from all of the hotels that use their trademarks. Really asset light model, lots of cash flow coming in to pay dividends, to buy back shares, to acquire new hotels. I think over a long period of time, those are great business models that really have limited things that can get in the way of the cash flows of the business and the ability to return shareholders capital to shareholders. So that's why I was interested in the name. I was really just looking for the right valuation. If we look back over the last number of years here, you can kind of see this name ran up in 2022 over $80 a share. Then it did come back down to around 60. I remember looking at it around 60, but there were other really good opportunities in the market. And then I thought it was a really good opportunity a couple weeks ago when this name hit 65 bucks a share. You know what? Let's start nibbling in. Hopefully I can average down closer to 60 if the stock keeps trending down. You can kind of see at that point it just trended down about 15% in a couple weeks to about a month. So I thought it was a good opportunity to get in. So started buying in. Ended up with close to about 20 shares. So it was a really small position. Had about 1,500 or 1,300 bucks in the name. And then what happened after that was soon after I started averaging in, didn't really get to build out my position. A rumor came out from the Wall Street Journal that Choice Hotels was seeking to buy Wyndham Hotel and Resorts. This would create one of the largest hotel chains in the country. And just to give everyone some perspective on these businesses here, I just wanted to show what brands that they own. So you kind of can see here on the Wyndham side, they own a ton of economy and mid-scale hotels. They do dabble in the upper mid-scale, the luxury, but like 85% of the revenue and the profits are really from economy and mid-scale. So think Ramada, Super 8, Howard Johnson, Travelodge, etc. And then when we go over to Choice Hotels, which is the company that is rumored to be looking to acquire Wyndham, it's some of those kind of hotels, but a bit more upper class. I think they just bought the Radisson, and they have some of these other brands like Quality Inn, Mainstay Suites, Everhome Suites, Woodspring Suites, etc. So similar types of businesses, except Choice Hotels is probably more focused on growing their, more mid-scale and up part of their business, while Wyndham, while they're trying to build this out a bit, has a lot of economy exposure in their business right now. So couple thoughts, and I'll just look at Choice Hotel stock quick. Over the last year, down 9%. You can kind of see the stocks tumbled after the news of the potential acquisition of them with Wyndham. I think one thing that's important to note here is Choice Hotel has a market cap of under $6 billion. Wyndham right now is just about $6 billion. So one of the factors that went into my decision is I find it to be very unlikely that Choice Hotel is going to come in and have an all-cash deal here to pay out shareholders a premium on their shares. It would likely look like equity in the combined company. So this isn't an acquisition, or I don't see this coming to life as an acquisition as much as a merger between the two companies. And that's the first negative. Like, I got a 10% jump, give or take, on the acquisition news. I don't think it's going to have the economics of an acquisition. It would just be owning the joint entity in itself, which doesn't you know, make me feel much better about the valuation of the company that I'm paying for. The other side of it is I find it to be unlikely that this deal will even happen. So I didn't really want to hold on to the stock up 10% and count on the deal to happen. There's an article here talking about lots of the reasons why people are skeptical. Choice Hotels has really been aggressively trying to pursue higher average daily rate businesses and channels. And buying Wyndham would almost be like going a step backwards. And while there are advantages in scale on having more hotel chains in the same loyalty program, better negotiating power with businesses like Expedia or travel sites. At the end of the day, there are also just some things that it just doesn't really make sense with the amount of liquidity and equity you'd have to sacrifice in order to make a takeover bid like that, as well as the exposure to those more economy rooms that they're frankly seem like they're trying to get away from. So it seems like the shareholders don't want to pay the whatever premium on the merger details, don't really like the strategy of moving backwards into economy. And you're seeing Choice Hotel dip as a result. Now these companies are both trading at about 20 times earnings. Before, Wyndham used to trade at a bit of a discount, closer to 17 and a half times. So the value of Wyndham relative to its peers has also kind of been eliminated on this little 8-9% run here, and that's another reason why I sold the name. I just don't think I'm getting in necessarily at a good price, and there's other stocks out there that have been going down in value over the last couple weeks. So sold my 20 shares. I made about $100, about 8%, give or take, on my $1,300 US investment. So, it's a very small number in the grand scheme of things, but made 8-9% in a matter of a couple weeks. Going to keep Wyndham on my watch list in case it does go back down to 65, low 60s. Would love to get back in the name. I still think the structural economics of Wyndham are a great business. I didn't get to build out the position I wanted, and I don't believe this merger is going to happen. And if it does, I don't think it's going to create a lot of shareholder value from here for Wyndham or Choice Hotel shareholders, to be honest. So moved out of this stock. What did I move into? So I bought two stocks that I have positions in, but I'm trying to build them out into bigger positions. The first one is Coca-Cola. Coca-Cola was a stock that I started buying to give it a bit of a longer window here. Started nibbling on it at 59, 58, early March, and then it really just took off kind of for no reason throughout April and May. I stopped buying it as it went into like $63, $64, $65 range. To be honest, I thought the company was a stretch when it was at 60 or 59. Company's going to make about $2.50 of earnings. So we are trading today at about 24 times current year earnings. Is trading at 26, 27 times up there. So I kind of stepped back. Now that we're back to 24 times, I still don't love the valuation, but it's a bit easier to bite on here. So I took some of the money, started buying some more Coca-Cola shares, buying in at that 3% starting dividend yield. And I'm really buying this one for the dividend growth over a long period of time, holding a pretty stable global blue chip business in the meantime. So getting a bit of a higher dividend yield here than I was with my Wyndham shares. Also maybe more reliable, let's call it, dividend growth on this one. With the size of the company and the history that they have. So that's the first place that I put some of my Wyndham money into from selling those shares. The second place I put some money into here was Realty Income. Really similar story on Realty Income. I started buying this one right around $60, exact same story as Coca-Cola, and it immediately ripped upwards to like $63, $64. So kind of went back, stopped adding to this name, had other opportunities in my portfolio. And now that at the same time Wyndham jumped a bunch there, 8-9% on that news, seems like Realty Income has gone down now in the $59, $58 range. So took half of the proceeds, bought more into Realty Income, has about a 5% dividend yield here. So like it a lot better from a immediate cash return than Wyndham. They also have a more reliable dividend growth history than Wyndham as well. So kind of like the allocation towards Coca-Cola, towards Realty Income, I'll get better cash flow on a monthly and quarterly basis as I wait to see what plays out with Wyndham. Maybe Wyndham's a stock I add back into my portfolio later on if it goes down, or if whatever happens with their earnings reports, I'll keep my eyes peeled. But in the meantime, fine to be more focused on building out some of these other new positions into real material, more notable positions in my portfolio with Coca-Cola and Realty Income. One thought on Realty Income, just for those of you who haven't seen too many details of the stock, they are a triple net lease retail company for the most part. They do a couple other things, but you can kind of see the type of assets they own here in the top right. Grocery stores, convenience stores, dollar stores, drug stores. Those combine to be about 30% of their annualized rent. So really safe types of businesses for the most part, once again. And then some of the retail brands, Dollar General, Walgreens, 7-Eleven, collectively, their top 3 tenants make up about 10% of the total dollars flowing to the company. You can kind of see down and across here where some of their other exposure is. For the most part, pretty safe overall. Some areas of some risk potentially, but when you diversify across hundreds and hundreds of tenants in all 50 states, it's really, unless there's a broader issues in retail, there's relatively limited risk. And then geographically, I just mentioned they were in all 50 or 50 plus states, which is true. They also have about 10% of the business in the UK, and they're expanding in Spain and Italy. So lots going on at this company, really turning into a broad, diversified real estate play that's paying you a 5% starting yield, which I really like. Currently have 90 shares in this one, hoping to get it up to at least about 150 shares, something like that, and then we'll see how it goes from there. So that's some news on a stock that I sold this week, being Wyndham, a couple stocks that I moved the money into for the time being Coca-Cola and Realty Income. If Wyndham does go down to 60 this week, for instance, I won't take the money out of Coca-Cola or Realty Income. I don't really like to sell stocks in my portfolio unless they're not fully built out or really built out. So it would probably be new capital going into Wyndham as I continue to further grow Coca-Cola and Realty Income. That's just a bit more about my style and how I tend to manage my investments. But just wanted to give you guys this update. It's rare that I sell a company, so thought it would be interesting to let you guys see my mindset behind it in occasions that it does happen. If you like this kind of content, be sure to subscribe to the channel. Definitely hit the thumbs up. It really helps the channel a lot. Feel free to watch any of my other videos on stocks and stock analyses that I do. I also review my portfolio on my channel. For those of you interested, you can check those out. And I'll see you guys in the next one. Thanks.